HXQ is a straight-up growth ETF with a couple of income-producing flavors. Fasten your seatbelts, folks. This is going to be a good one. AI and technology stocks have been taking center stage as well. The NASDAQ continues to find new all-time highs. And, of course, NVIDIA, they're sitting up there on that silicone throne. It goes without saying that a lot of smart money is banking on the tech sector. Interestingly enough, one of the most common questions I receive is which tech or AI companies are going to explode in value? That is a great question, and it's not as easy to answer as you might think. There are always the safe bets like NVIDIA, Microsoft, and of course Apple. However, once you start going down the list, it does become less clear which companies will be in the winner's circle. This is where an ETF like the Global X NASDAQ 100 Index ETF has a ticker of HXQ. That's where they come in. They take the guesswork out of your bet on tech or AI, if that's what you're betting on. They essentially provide you with the exposure to 100 of the largest US and international tech companies that are listed on the NASDAQ. So, as companies succeed, or of course fail, this ETF will take that into consideration as they weigh their investments in their tech basket. So, as companies succeed or fail, this ETF will take that into consideration as they weigh their investments in that tech basket they're maintaining. If a stock performs poorly, they can lessen the weighting, or if the stock is a superstar, they can say, more please. HXQ does not provide a dividend, as it is a pure growth ETF. Thus, it can be very tax efficient in a non-registered account. However, it is fine to hold wherever you please. I did say that this ETF comes in many different flavors, and that is true. Global X has you covered if you are looking for the same exposure, but maybe with some passive income on the side. They do have a covered call version of XHQ under the ticker of QQCC. This ETF provides a great yield from premiums received as they write covered calls on the underlying HXQ ETF. We will break down in a little bit just how much we are talking about when it comes to passive income. Additionally, for those who want to make even more than what QQCC is serving up, there is also an option to add a little leverage to the mix, and that gives us QQCL. You know, if you want to add a little leverage to the channel, hit that subscribe button. We will be looking at HXQ in this deep dive, but the stability and strengths of this ETF, well, they do propagate into QQCC and QQCL. With that being said, we will still look at some core details of the income ETFs as we go along. You could say in many of these data sets, we may just have triplets. Of course, to dive into all these numbers, we will need to call upon the only person who can multiply faster than the Flash can run, the one and only Mr. Math. We will start with a little surface data to get this dive underway. The current value of HXQ comes in at $78.11 at the time of recording. QQCC is at $12.27, and QQCL comes in at $23.25. The NAV on these guys, HXQ $78.03, QQCC $12.25, and QQCL $23.37. Now, this next value I don't have to say 3 times, and that's the assets under management. That comes in at $555.75 million. The beta on this ETF comes in at 0.74, so they're less volatile than the market average, which would be 1. Looking at the average volume for HXQ, we get 16,069. For QQCC, we got 25,412. That's a little interesting. And for QQCL, we have 11,560. That just goes to show the popularity of covered calls. Well, I think we need to dive a little deeper, and we'll take a good old look at the fund specifics. Let's start with those fees. It is always good to know how much an ETF is taking from the pie before they divvy out the remainder to us. When it comes to a management fee, for HXQ, it comes in at 0.25%, QQCC 0.65%, and for QQCL 0.85%. Their management expense ratio, HXQ 0.28%, QQCC 0.85%, and QQCL 2.33%. You can see very clearly looking at these fees that as you get more complicated, going from the regulars, there's very little fees on the regular growth ETF, the covered call, a little bit more, and then you really do see a jump up in the fees on the leverage. And that makes sense. There's a lot more management that goes on behind the scenes, so it's going to cost more money. So what stocks are they holding? I can confirm that as of 2024 Q1, 95.89% of their portfolio consisted of U.S. equities. That does make sense, as a lot of the big tech companies are in the U.S. So their top three holdings are Microsoft at 8.72%, Apple at 7.38%, and NVIDIA at 6.32%. Going into a little bit of their diversification, so you're thinking, it's a tech ETF, it's all tech. You'd be mistaken. In fact, internet technology only makes up 51.82% of the ETF. Communications, though, that makes up 14.89%, and consumer discretionary comes in at 13.70%. You have to keep in mind, almost everything uses technology to some point or another, hence the reason you get some of these other values in there. Now that we kind of get a little bit of information going on here about that fund, it is time to take a look and see what sort of returns they have been producing. When we look at their dividends, of course, HXQ has no dividends, so we're not really going to talk about them. QQCC, they've got 10.505%, and that is a monthly dividend of 10.7 cents per share. When we look at QQCL, their dividend yield comes in at 12.771%, and that's also a monthly dividend of 25 cents per share. Switching over to return on investment. So for HXQ, their 3-year return on investment comes in at 51.11%. On the year-to-date, their return on investment comes in at 23.12%. Of course, those numbers are also total returns, as they don't have any dividend. For our passive income ETFs, we're only going to look at the year-to-date, as QQCL is relatively new. So for QQCC, that year-to-date return on investment comes in at 11.14%. Factor in those dividends, we get a total return of 16.96%. Over to QQCL, their year-to-date return on investment comes in at 13.41%. Factor in those dividends, we get a total return of 20.73%. That is not too shabby. These are great returns, though. It is interesting that HXQ finishes on top, even over the leveraged version. With that being said, if you are reinvesting the dividends from these back into, well, QQCC or QQCL, you end up with a slightly different story. Things get a lot closer for sure. I think we've seen enough data that we can ask that big question, what is my final verdict? I have been a fan of this ETF for a while, as I do like its overall structure, and I've also liked both passive income flavors as well. In essence, between the three ETFs, so HXQ, QQCC, and QQCL, they have covered most of the bases for sure. HXQ is a great option for the growth and, of course, the total return investors, while the other two are fantastic for the income investors. QQCC for the more conservative income investor, and QQCL for the ones with a slightly higher risk portfolio. In fact, I currently have a side challenge between HXQ and QQCC within the 0 to 100K TFSA challenge. I only wish I had included QQCL in there as well. If you are interested in any of the ETFs that we looked at today, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on the table. Let's continue that learning journey by checking out this video on leveraged ETFs. Thank you for watching, and I will see you in the next video.